Let me ask you something unusual. Why do people talk about AI stocks like they're picking sports teams? Team NVIDIA, Team AMD. No, Google is the greatest, but AI isn't a sport. It's not a popularity battle. It's a machine taking over every industry, and the most powerful players are often the ones nobody is watching closely. Today, we're breaking down 6 NASDAQ-listed AI stocks that could shape 2026. And there's a bonus pick you think you already understand, but you probably don't. We're not here for hype. We're here for the ecosystem behind the hype. Before we start, a quick disclaimer. This video is educational. I'm not your advisor. I don't know your goals, your risk level, or how much caffeine you drink before trading. Do your own research before you invest. All right, let's talk money. Here's the first company. It already understands how you think. Not your bank, not your phone manufacturer. A company that studies your eyes on YouTube, your voice on Google Assistant, your routes on maps, your emails, your clicks, your searches, your ads. This company doesn't use AI as a feature. It feeds AI using the entire internet. Its AI model, Gemini, isn't just competing. It's training on one of the largest real-world data sources ever created. Yes, it's Alphabet, ticker GOOGL, and here's where it gets interesting. People keep asking, is Google too big to grow? Well, when a company generates more than $70 billion in free cash flow every year, it doesn't need to explode. It compounds like a snowball rolling down Everest. At a market cap of around $3.8 trillion, it still has room to accelerate because AI is being injected into every major part of the business. YouTube ads are now AI-optimized. Google Cloud is turning into an AI-first platform. Their custom chips, called TPUs, reduce dependence on third-party hardware. Analysts expect only 6% earnings growth in 2026, but Alphabet has a habit of outperforming conservative estimates. When AI upgrades every revenue stream at once, the numbers become outdated very fast. Alphabet isn't just a search company anymore. It's becoming the world's largest engine for monetizing human behavior using AI. Now let's look at a different kind of player. Everyone screams NVIDIA at the top of their lungs. But what if there's a competitor who doesn't need to win the race? Just stay close enough to get paid. They don't need to dominate GPUs. They just need a seat at the same table. That company is Advanced Micro Devices, AMD. AMD used to be the other chip company. Today, their MI300 AI chips are entering data centers that used to be NVIDIA-only territory. That's like the quiet student suddenly sitting at the popular table. You don't need to be the leader. Just being included changes everything. Here's the part the market is missing. Expected earnings growth for 2026 is around 62%. Yet AMD trades at a forward price-to-earnings ratio of about 33. That gives it a PEG of around 0.5, suggesting its growth is being discounted. Translated into normal language, the market still hasn't priced in AMD's acceleration. AMD doesn't need to destroy NVIDIA. It just needs to keep closing the gap. Next, think about this. AI needs 2 things: compute power and communication. You can have the fastest GPUs in the world, but if the network between them is slow, then your AI model might as well be running on a microwave. So which company builds the highways that allow AI chips to communicate at extreme speeds? A company almost no one outside tech bothers to study before buying GPUs. It's Broadcom, ticker of VGO. Broadcom is the toll booth of the AI world. Every time AI communicates, transfers data, or scales to a larger infrastructure, Broadcom earns money. Investors chase GPUs for hype. Broadcom quietly collects revenue. Look at the numbers. Free cash flow margin of around 41%. Stock growth of more than 120% over the past year. Major tailwinds after integrating VMware, plus new demand for optical networking, which is critical for data center AI scaling. Its valuation looks expensive at around 40 times forward earnings. But when expected earnings growth is about 38%, the PEG ratio of around 1.1 suddenly looks reasonable for an AI infrastructure provider. Broadcom isn't building the car. It's charging tolls on the highway the entire AI industry needs to use. Now let's talk about something every AI model needs nonstop: memory. AI consumes memory the way teenagers eat snacks, endlessly and without shame. There's one company feeding that appetite. Micron, ticker MU. Micron produces high-bandwidth memory, or HBM, which is required for training large AI models. Without it, GPUs are nearly useless. Everyone obsesses over chips, but AI can't even wake up without memory. Here's the shocker. Demand for HBM is expected to triple by 2026. not rise, not climb, triple. Micron's numbers already reflect this shift. Stock performance up more than 130% in the last year, gross margins around 40%, a market cap of about $254 billion. And yet, at a forward price-to-earnings ratio around 13.8, it still looks undervalued for a supplier about to experience a demand explosion. Micron has been the nerd in the corner for years. Now AI just realized the nerd owns the answers. Now let's step out of the semiconductor world and ask something nobody asks. If AI is a revolution, what's its oxygen? Electricity. AI data centers are expected to consume more power than entire nations. So which company powers this monster? Not a flashy startup, not a tech brand, a major U.S. energy provider with nuclear, gas, and renewable sources. Vistra, ticker VST. Here's how investors are missing the point. Tech analysts track revenue, but AI needs megawatts before it needs software. Vistra is treated like a boring utility stock. But while tech companies panic about power shortages, Vistra sells them the oxygen. Look at the fundamentals. A market cap of roughly $59 billion, dividend growth averaging around 11%. And analysts expect as much as 40% upside from recent targets. The stock recently dipped about 20%, not because of weakness, but because the market hasn't connected the dots yet. Vistra isn't AI-related. It's AI necessary, and the last one before the bonus. Imagine a Bitcoin miner with access to cheap, abundant energy. Instead of mining coins, it decides that the energy itself is more valuable than crypto. That's Iris Energy, ticker IREN, a company transitioning from cryptocurrency mining to powering AI data centers using clean electricity. It's risky, it's bold, but the market likes the pivot. The stock is up more than 215% over the last year, market cap around $13 billion. Analysts suggest targets that imply significant upside from here. Iris isn't chasing digital coins anymore. It's renting power to the intelligence economy. This is what high-risk, high-reward actually looks like, not hype, infrastructure gambling. Finally, the bonus pick. You already know the name, but most investors have the wrong idea about what it does. It's NVIDIA, ticker NVDA. Most people still think NVIDIA just sells GPUs. It doesn't. NVIDIA is building an entire closed ecosystem, the same way Apple built its walled garden. NVIDIA sells the tools, the platform, and the world those tools live in. Even after criticism that the stock is too expensive, the numbers say something else. A forward price-to-earnings of about 24.4. Expected earnings growth near 60% for 2026. That combination suggests the stock might still be undervalued for its growth rate. NVIDIA isn't stepping down, it's building a fortress. And here's the bigger picture. AI isn't a stock pick, it's an ecosystem. Alphabet owns the data and the interface. AMD powers the competitive hardware race. Broadcom builds the communication highways. Micron feeds memory to the machines. Vistra powers the entire operation with electricity. Iris Energy builds clean infrastructure for future data centers. And NVIDIA creates the empire that everything plugs into. If you only pick the loudest names, you miss the companies that quietly run the world behind them. So here's the question. Which part of the AI ecosystem do you think dominates 2026? The chips, the memory, the energy, or the software? Think about it, then share your pick.